Hey folks, welcome to Verified Investing here at InTheMoneyStocks.com. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, December 22nd, 2020. So let's quickly go over the S&P 500. Then we're going to delve into some key stocks with key trading opportunities for you guys. Before I do that, just a reminder, you can find me on Twitter at Gareth Soloway. You can also come to InTheMoneyStocks.com's website. You'll see my name, Gareth Soloway, at the top. There's a drop down which shows you both the services that I run. Verified investing alerts, I think 195 closed out trades for about 1,750% return this year. Plus, there's daily videos that I do in that service as well as weekly live broadcasts. Really a stellar service. All right, looking at the S&P right now, we're down 60 cents on the day, just a fractional down move. Again, really not much to discuss on an intraday basis, being that the volume is so light today. But what I have to show you guys is the continued power of this trend line. So basically, if you take the highest pivot going back to 2018. And the reason why I chose this pivot point is because it was just before the big decline of 20% into the end of 2018. And remember, that's when the Federal Reserve began to threaten to raise interest rates, and they sure did back off quickly as soon as the market threw a hissy fit. All right, so you take that pivot and then you extend it to the pivot here, which is the COVID-19 pandemic panic, that we saw a 30% decline on. So 20%, 30% decline. And then as you can see, if you extend that line out, you have this pivot high pullback, this pivot high pullback, and then look at where we're trading now. We're just chopping around that line. That's a concern. If you're a bull, you should be concerned by that. The reason is because off of that trend line for the past 2+ years now, we've seen big corrective moves. So the question you have to wonder is this an omen or is this a signal that a big corrective move is on the horizon? Whether or not that happens, I am not sure. I am positioned on the short side myself overall because I do think the markets are overdone. When you see IPOs like Airbnb and DoorDash go nuts, when you see all the SPACs getting put out into the open market, when you see PE ratios and you see insider selling to the magnitude it currently is right now, those are all things that as a longer term investor and trader are very concerning to me. They're signals that I was seeing basically a lot of the same stuff that was going on in the late 1990s. Now granted, things didn't collapse in the dot-com bubble until early 2000, but ultimately it's a signal that there's something wrong with the market when you have this much money flowing in, especially when there's this disconnect from the actual economy. Granted, it's because of the Federal Reserve and the stimulus that the government keeps passing. But the question is, at what point does the market freak out over even that? And the reason, and listen, I'm just going on a little tangent here, but the reason why the Fed won't always be able to control the markets to the upside is that eventually the dollar will lose such an amount of value that we will no longer be able to borrow money from other countries. Other countries will say, nope, we're not going to lend you anymore because you keep devaluing your currency because look at what you've done over the past 10, 20 years. And that's when the buck stops. That's when things really get nasty. Once they say that. All right, now when will that happen? That's a big, good question, but that's why I watch the US dollar so closely as well as interest rates. And this is something interesting. Interest rates are just below 1% on the 10-year, even though they were under 0.5% on the 10-year about 6 months ago. And interest rates are moving up even though the Federal Reserve has not raised interest rates. And that's the market just doing what it does, which it inevitably will do even if the Fed wants to keep interest rates lower. At some point, interest rates will spike irregardless of the Federal Reserve. Okay, so that's just a little knowledge for you guys, but looking at the S&P, keep an eye on this range. If we're going to see a sell-off, my guess it occurs probably in the first 2 weeks of January. Hard to imagine we'd get a big sell-off with just a few days left in this week before the Christmas Eve half day and closed on Friday, Christmas, and then same thing the next week. I think New Year's Eve is a full day of trading, but New Year's Day, obviously, which is next Friday, a week from Friday, is the markets are closed. Now, let's take a look at Tesla here. Tesla's worth keeping an eye on. The stock is down another 2.75% here on the day. And look at this long-term trend line. And I find this fascinating because this pivot high to this pivot high gave you this pivot high. And then you can see this fake close. And this, I call it a fake close because if you go to your intraday chart on Tesla, Tesla never traded up here on that day. So here's the day where last Friday where it was added to the S&P 500. at the close, and the closing price on the intraday chart was 665 right here, but they somehow did a fake close at 695. And if you look here, even at the beginning of the day, the stock never traded as high as 695. So here's the highest point, which is in the 685 range, but you can see nowhere in the afternoon session did it even get close to those highs again, yet somehow they closed it up at that level. Now, the reason why that's interesting is because if you reversed it out to that 665 close, then we would have closed right on this trend line, and then look at the sell-off. It makes perfect sense why the stock is selling off of this trend line. So keep an eye on that. Now, overall, is Tesla going lower? The answer is yes. Apple just announced yesterday that they're getting into the EV market as well as the self-driving car market. This is going to be a destroyer move for Tesla. And the reason I say that is, you look at like Nikola, right? Okay, Nikola, whatever, they're a non-event compared to Tesla. Tesla's the behemoth in the room, right? The $600 billion market cap company. But even if you look at Ford and GM, those market caps pale in comparison. The ability to raise cash pales. But when you look at Apple has $100 billion in cash alone sitting on their balance sheet. I mean, they can come in and make a splash in the EV market. And that is going to be, in my opinion, the big competitor. And again, they're talking about in 2024, which is about 3 years away. But nonetheless, that is something to watch. And I think that Tesla, unfortunately, for those of you that love Tesla, and by the way, I'm on the waiting list for the Cybertruck. So I like Tesla as a company. I just think it's overvalued here considering the competition. They're also falling behind in battery technology and all these things. This is going to be a weight on Tesla's back and probably take it down to about 300 or sub 300 per share. And by the way, even at $300 a share, it's still worth more than Ford and GM, basically combined. So keep that in mind. All right. So we'll talk a little bit about that. Another stock I wanted to touch base on here, folks, is Square. So let's take a look at Square. Square is very interesting today because you're right at the highs from yesterday, which was a topping tail. Topping tails are bearish signals. So again, to me, even with today's pop on Square, I think this is a bearish sign, and likely Square will head down in the short term. It's obviously gotten a big boost because of Bitcoin and what they're doing with incorporating Bitcoin and so forth. But again, to me, this looks a little bit toppy here, especially because it looks like the topping tail is still holding on the chart. Another chart to take a look at, Peloton. Take a look at this, guys. This is such a cool chart. All right, so I shorted Peloton today. We actually day traded it a couple times in the live day trading room as well, which is the day trading service that I run here at InTheMoneyStocks.com. But on a swing basis, I'm short. And the reason I'm short is all technical, right? I don't really go by gut feelings or emotion or blah, blah, blah. It's all technical. So when I see a trend line here, which is taking the highest pivot on both sides for a long period of time, and then same thing here, right, highest pivot, and I extend out and I see a 7-bar upswing in the stock where it gaps up and pushes right into this level, I have no choice but to pull the trigger on a short trade there. So again, that's exactly what I did today, and I do think that, again, this stock is likely going to pull back in not just the next few days, but also in the next few weeks going into the new year, based on the fact that, and think about this lunacy, right? The stock gaining about $5-6 billion in market cap today. They bought out a company valued at $420 million. So $420 million buy by the company nets them basically $5-6 billion in market cap. It doesn't make a whole lot of sense, but that's the type of market you're in right now, where things just don't make sense, but they continue to go up until they don't. And that's the concern. At some point when they stop going up, that's what we're going to be watching. So we'll watch this, but let's see if it pulls back in the next few days. Should be very, very interesting. Another stock that I like on the short side and am short is Redfin here. And Redfin, again, just remarkable how many green candles in a row. I was doing some fib retrace lines here. My guess is whenever this does start to pull back, see this longer term trend. So this was a trend it was following. So it kept on hitting here, pulling back, hitting here, pulling back, hitting here, pulling back, etc. Kept on hitting. And then it finally got extended above that. This is going to be your retrace line, which is also a 382 retrace Fibonacci level. So look for basically $67-ish on a retrace, which is, that's about a $15 drop from here on that stock. And again, it is extremely overbought. Just to put it in perspective, the RSI right now is nearing basically at 91 on the daily chart for the RSI. And that's incredible, folks. You don't see many stocks get above 80, let alone 90 on the RSI, and this certainly is above that at this time. So anyways, just some ideas here, folks. We'll see what the market does in the next few days. I'm not thinking you're going to get a lot of action because of the holiday. The only thing that's kind of an outlier, if somehow it was found out that the new variant for COVID, that's hitting the UK and some of Europe so hard, if the vaccine doesn't attack that variant, that would be a very negative thing for the stock market, because it basically would mean that now we have a new variant, a new COVID, variant that spreads faster than the original. That's not, the vaccine won't work on, and when basically we're all screwed at that point. So that would be something that the markets would freak out about. Supposedly it will work on it, but I think the scientists are still confirming that. It's probably going to take a little while to confirm it for sure, but certainly something to keep an eye on for, in the coming days and weeks going into the new year. All right, you guys have a wonderful rest of your day. Again, come find me at inthemoneystocks.com. Remember that drop down where you see my name. There's a drop down, and my services are under there. Take